Hello, everybody. Welcome to Monday. The S&P 500 was up a little bit more than 0.2% today. Again, another all-time high close, of course, which is great. Even more fascinating, the Dow actually, which goes back to the 1880s, and it's only 30 stocks. I don't talk about it as much because it's such a small index, but it closed above 38,000 for the first time ever today, also. So kind of amazing altogether. All of the different indexes are slowly but surely getting to a point where they're setting all-time highs, which is good. So it's basically been a 2-year recovery period from the drop down through October of 2022, and then back up really to a new high again on Friday of last week. So, why is this happening? Mainly because companies continue to still do well on earning wise. The consumer continues to spend, kept us out of a recession. Rates came up a lot, created a lot of volatility for the market, a lot of uncertainty, but the consumer kind of bailed us out and continues to come out. Money that came out from the pandemic and pent up demand to go do things now that we can, is really what's kind of driving things as far as that goes, and we're continuing to see that. Now, you throw on top of that this artificial intelligence arena that is exciting the market quite a bit. There's an awful lot of momentum that's happening here, and I'm a big believer in momentum. Use it a lot with our investing philosophy. Seems to work well. We look for sectors of the economy or the market that are having momentum, that are moving strongly. Software and semiconductors, for example, right now would be a great area to be looking at. Generally speaking, because the momentum will generally run for a while, so you can get in there. You don't have to get in there early per se, but you can still ride that wave for a while. And I think if you look at the whole market, that's what's happening right now. We've got this momentum that's happening really starting back, at the end of last October from last year. The market has been quite strong. Now, once you break into a new all-time high, the normal pattern would be to go back and challenge that high on the way back down and then bounce off of that if you're going to hold up. So, maybe we see a little bit of softness here this week, next week, whatever it is, comes back down, and then it kind of takes off. But normal is just a overall catch for looking at how things might play out. This could continue straight up for all we know. I will say, we're in the middle of earnings season, and there's been some, decent surprises to the upside in some of the areas that the market seems to care about. And so we're seeing some good motion out of that. And I think this earnings season will be very important as far as that goes. And on top of that, coming up here at the end of on Friday, we will have the PCE report, which is the inflation report that the Fed really looks at. I'll be very fascinated to see how that plays out. I thought the CPI report for December wasn't that great. Showed a little bit more inflation than I would have liked to seen, but then the wholesale inflation came out right after that, and that was actually quite good. So this will be interesting to see what happens with this preferred measure for the Fed, because that's the main dominant force here. If the Fed can stay back and stop, raising rates, and there'll be some fear that the Fed leaves rates up too long and something breaks, but that's a little bit story for another day. At least I think at this point in time. Right now, momentum is on our side. It is moving the markets in the right direction, and I think there's a reason for that. So good day today altogether. Another all-time high close, which is always fun. I look forward to seeing what's going to happen tomorrow. Thank you very much.